Welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Welcome to the next episode of Crypto for Advisors podcast by Synergist. I am delighted to have in the studio today two good friends of mine. We've known each other for a long time, Shane and Andrea McKenna. Shane and Andrea started the Aintree Group 20 years ago. They just celebrated the 20-year anniversary of their business. And over that time, they've grown it into a really impressive business. They've broadened their product offering out to their clients, and they've grown into a business that I really admire, and I think they've done a great job. So I'd like to probe into that a little bit as well. But welcome, Shane and Andrew, and thanks for coming on the podcast.
Thanks for having us, Andrew.
Yeah, thank you.
Fantastic. So 20 years of Aintree. The business has certainly evolved a lot. What do you think has changed the most?
Oh, gee, all of it really. So we started 20 years ago. We started in our kitchen with three people, and we were providing just taxation and business services, but fairly small. And 20 years later, we've now got a team of 56 at the moment. It changes quite quickly.
It increases regularly.
Yeah, 56, but as you said, we've broadened our service. So we do accounting as a core business, accounting and taxation business services, advising small business clients, etc. But then we also have got a legal business and also finance and wealth business. And so, we've broadened in that respect.
Yeah. And one of the things that I really have always admired about how you run the business is that you're very progressive in how you do it and how you embrace new technology, even your marketing. You've really sort of leaned into social media and you sort of get your messages out where your clients are and consumed in a way that they want to consume it these days. So you stay very progressive and modern in your approach. And I think that's why, we've had a bit to do with each other recently. Once I started narrowing my focus in on the crypto market and trying to bridge the crypto service gap with traditional finance, you were some of the first people that I spoke to, and you didn't hesitate. You were really enthusiastic and keen. What were you thinking the first time I turned up and said, "Hey, I'm into crypto, let's chat"?
I think the first thing was, what is this weirdo doing? No, it wasn't. It was more, because you came to us and you said, crypto is typically I heard it down the pub. Like, that's the common thing is when people come to us and say, we're doing a bit of crypto investing. It's more, my mate told me that this one is good or this one is doing good things at the moment, or it's really rapidly progressing. I'm going to make a lot of money out of it. And for us, you came to us and you said, what I want to do is teach people about crypto, about what it is about, what the fundamentals of it are. So instead of it being that down the pub, people are, nudging each other and saying, oh, are you in crypto and are you doing really that mysterious thing? It was about bringing an element of what traditional markets do with investing. And you were saying, I want to make people understand that it is an investment, not something that we, gamble away with each other. So for us, and because a lot of what we do with our business is education and making sure our clients are really well informed, the first thing you said to us is, I want to tell people about what it is. I don't want them to be making silly judgments. I want them to understand that it's a real honest investment class. So, for me, that's what it was.
Yeah, and I think the same. And we've had a lot of experience with crypto with our clients, and personally as well. And we've seen the good and the not so good. Yeah. And again, the lack of understanding about so people are just putting the money in without actually understanding what they're investing in.
Yep.
And that is a real issue for me, because we always want to make sure, as Andrew said, our clients are fully informed and they know what they're investing in and know the pros and cons of it. And also for us too, the taxation side of it too, which is very important, which we'll probably touch on slightly. But so it's all about that, the fact that to educate and to make them more fully informed so that they can minimise the risks on those investments.
Yeah, fantastic. Really what I'm trying to help people do is two things. One, work out whether crypto investing is right for them, So making an informed decision about that. And then secondly, working out what's the best pathway for them. And one size doesn't fit all. And there are, crypto, when you don't understand crypto, you tend to, with anything, you tend to put a generalization over it, and lump everything into the one basket and say, this is highly volatile, highly risky.
Yeah.
But, the Bitcoin is very, very different to, Trump coin or, some dodgy meme coin or even some really low market cap DeFi play.
Yeah.
Or GameFi, which is unproven, but high potential. Very different dynamics, very different risk profiles. But if you don't know that, if no one's actually explained that to you, it's very hard. You are kind of just relying on your mate down the pub saying, check out this coin, it's going to 10x, and seeing some guy on YouTube, spruiking his latest pet project. And it's not really how you want to be making wealth management decisions. It's very different.
Yeah.
And there's so much exciting stuff that goes on with the way that crypto has moved. It's not because it's a tech thing. That it's not just I'm going to buy whatever it is. I'm going to be part of a movement towards something that could be really exciting. And when you talk about it, you're talking about how it's not just about buying and selling a cryptocurrency or the different coins and stuff. It's more about where it's going to go in the future. And I think for our clients, because we work across all the different industries, you and I have had conversations about the fact that, we'll be talking about property transactions in using the same fundamentals as what crypto is, blockchain and stuff. And those are the things that you're not necessarily going to make millions of dollars on, and you're not making, crazy investments on. There's some really serious research and investment going on behind the scenes in all of these platforms. And that's what we need our clients to understand too, is that, there's so much to it.
And that's the exciting part for me too. It's not necessarily the trading and trying to make that quick gain. It's the actual underlying technology behind it.
Yeah.
What that's going to mean for the future. For us as people and our day-to-day transactions, like, as we said, the blockchain and title holdings and things like that.
All sorts of things. Like
there's so
being able to go overseas without actually having to worry about what currency you're using, because you can use the same currency no matter where you are. And that sort of stuff is super exciting.
Yeah, and it's happening right now. I draw a lot of comparisons between crypto and blockchain technology and AI. It's happening now. It's happening so quickly. A lot of people kind of know that it's happening, but they don't know the details on what it is. And stable coins is another big use case that, stable coins, which are cryptocurrencies linked to or pegged to a fiat currency, the US dollars, Australian dollars, they're now bigger, more value transacted through stable coins than MasterCard and Visa combined now. So it's happening now. MasterCard and Visa are settling in, allowing people to settle in cryptocurrencies, purchasing cryptocurrencies through their networks.
People don't think about those things. Traditional investors are not keeping up with those sorts of things. And I think that's why it's really important that we give voice to people who are educating the community on that, because it's not just about, the YouTube stuff that you hear. There are some really traditional things going on, but in the technological space of crypto. So
this is one of the big challenges. I mean, we're going to drill in a bit to the challenges of how do you, it's hard to say it without sounding, pretentious or something, but it's, how do you kind of professionalize crypto? Or how do you present crypto as an asset class to the wealth management industry? The professional accredited financial advisors, you're belonging to your peak bodies which have rules and regulations. You've got to sit within a jurisdiction which has very specific things on what you're allowed to do and how you're allowed to do it. You're sitting under the licensees. You're in a very regulated, controlled environment, and that's there to protect the consumer as well as helping them achieve their goals and maintain a high degree of professionalism. And yet crypto is the Wild West. I mean, there's all these exciting changes and innovations and value being created, but 99% of coins, end up being worth nothing, and a lot of people get burnt in the process. So how do you frame that in your head? Like, how do you guys are really progressive, but how do you juggle that?
Well, I think part of the issue, which you talked about before, is regulation. It's not regulated at the moment, and I think the investment community and the government are finding it hard to actually work out how that regulatory regime will capture cryptocurrency and blockchain and everything. So I think that's a challenge part, and that's part of the reason why I think at the moment it's a bit of the Wild West, because you don't have that regulatory overlay that gives some sort of protection. And I think also it's an immature market, even though it's been going for a while still, it's still immature. And therefore you've got that volatility, and you hear the wins and you hear the losses. And you see, and there's also security issues at the moment with some things where people are getting scammed or losing money through cryptocurrency.
Yeah.
Plus then also the potential black market use of crypto.
Okay.
There's all those things. So it's really hard, but again, it's about unpacking and looking at what's underneath the cryptocurrency itself, and looking at the blockchain, all the underlying whatever it is behind the coin, not the coin itself, to understand what the application of that is, and educating people on that so they can see the future benefits of what that will be. And then that gives them a better clarity about that this is a legitimate asset class, which has lots of upside because of the application of what it will create in the future. So I don't know if I've answered it, but that's...
No, you have. It's reminding me of a conversation. I've just come back from the Stockbrokers and Investment Analysts Advisors Association conference up in Sydney. And I had a great conversation with one of the CEOs of one of Australia's biggest stockbroking firms. And he said something which I hadn't thought of before, but it really resonated with me. And he said, look, it's like when self-directed, share trading started. And I was a big, back in the late 1990s, early 2000s, I was building a platform in London, a share trading platform. I ran E-Trade for a while. I've been heavily involved in that. And he said, when it first came out, it attracted people. Well, first of all, there was a lot in the industry who were pushing back against it. How could you possibly let people buy shares without having an advisor saving the day? But also, he said, people were gravitating to it because it was accessible, but also because it was fun. It was exciting. It was interesting. It was almost like entertainment. And we've kind of lost sight of that in the equities market. I think ETFs has just pushed everything into the middle of the bell curve.
Right.
And so, that's what crypto's presenting to the market. And it's why so many younger people and older people as well are sort of going into it going, kind of, this looks interesting. I want to learn about this. It's kind of fun, Why can't it be fun?
Yeah. Oh, agree. And financial side of things and accounting side is not the most sexy of things, whereas it is.
Oh, depends how much money you're making.
Whatever rocks your boat, Andrew. Yeah. Different things for different people, but definitely it's got a more dynamic flavour to it, and it's not the norm and traditional thing. And you'll always get people who, this is the way we've always done it, this is the way it should always be. You're going to always have that core of people, but as we're seeing with social media and everything else, the younger generations are more receptive to these things and more open to it, and are happy to test and try these things. Again, as long as they're educated, they're not doing it blindly, and it's just FOMO type things where just the fear of missing out, therefore they've done it, I better do it. But there's got to be some underlying basis to it. It's just about that education part, and that will drag, those people will then drag the more conservative people along for the ride at some point. And the markets, you're looking at the next generation of investors being those young people. The institutions and so on have to embrace those people, because the baby boomers and those are, sorry to say it, but are dying and retiring.
Yeah.
So they've got to adapt. They've got to adapt at some point. It's just about the timing of how quickly that will be.
Well, intergenerational wealth transfer is, probably the biggest, certainly the biggest client-driven trend at the moment in the industry, and will be for some time. There's some astronomical numbers being floated around how much money is going to get transferred to the next generation. And so I often look at that and go, well, guess what that generation are going to want to invest in?
Mm-hmm. Yep.
Then and if the advisor who's guiding mum and dad or grandpa and grandma and has been for 30 years, 40 years through their wealth journey and done a great job and accumulated a great portfolio, are they going to be able to retain those clients, that next generation, if they can't even or won't even if they could talk about cryptocurrency as a potential asset class?
I don't think so.
No.
I don't think they will retain them. So they have to adapt, but it's just about that supply-demand thing, isn't it? It's about, is the demand strong enough yet that they have to adapt? Because a lot of them, they are reactive, and therefore they're not going to be on the front foot to do that. So that's where you've got to find those institutions or those advisors who are on the front foot. So because the benefits are, if you get in earlier, then there's potential more upside on it. If you get into something early that's got that potential and also has got the underlying asset or I'm trying to think what the right word is, but product that you can then develop and get a return on down the track.
There are barriers to it. Different investors are going to want different information in order to make a decision. Like a 20-year-old putting in, $50 is going to probably not require too much information.
Probably not.
And certainly wouldn't listen to it anyway. But
that's just a generalisation.
I'm talking about my kids here, all right? I'll be honest.
Same. We understand.
But as someone in their 50s who has got a self-managed super fund and is saying, look, I actually want to diversify this. I can spread my risks. I can combat inflation risk here as well. I'm thinking about putting 5%, and if it goes well, maybe even up to 10% of my portfolio. That could be a significant amount of money. And so they are going to want more peace of mind and more comfort. How do you present that information to your clients? Like, how do you guide them? Do they come to you looking for that level of information, or
they do? Again, it's one of those things where crypto, because it's not regulated and it's not part of an AFSL licensing requirement, we've got to be very careful about what we talk about.
Absolutely.
So that's so at the moment for us, that's one of the actual big restrictions on us giving the clients advice in terms of cryptocurrency, because the regulations don't allow us to. Simple as
and
that.
can we drill into that a little bit? Because, there's personal advice, there's general advice. And so personal advice is, you should buy Solana, right? And can't do that unless you're, without being a registered financial advisor and having done statement of advice, all the rest of it, right? And then there's crypto is an asset class that you could put 5% of your portfolio into, and that would probably meet your risk profile that we've been advising you on.
Yes.
And so that's general advice?
Yes, correct.
And you're allowed to do that or not?
Well, this is, again, the grey area. My understanding is that, yes, we can, because it's general advice and we're not giving specific product advice.
Yes.
Again, the grey area is crypto a product itself, or is crypto just a class of investment?
Yeah, look, I can give you my opinion, but it's likely irrelevant.
Yeah.
It really comes down to the regulator. Look, ASIC are doing the best they can at the moment. It is complex. It's a challenging, question to answer, because there are very, very different types of cryptocurrencies out there which behave or have different functions in them, inherent in them, which, will pass or fail different tests around, is it a security, is it an asset, is it property, is it whatever.
Yeah.
And so I think it's, that's what they're grappling with. That's why it's taken so long.
Yes.
They've gone through their consultation process to update Info Sheet 225 or come out with a new digital asset license, and indicated that they're going to bring out a digital asset license, hopefully this year. But, it's proved challenging so far, so we'll see. But in the interim, I guess, so you can say, look, if you're interested in crypto, it's a speculative asset class, it's a higher risk. So given your profile, you should be thinking of this sort of percentage allocation. Is that where it ends as far as what you can do?
Pretty much. Again, my opinion is that's where it ends. Yes.
Yeah. And if they say, I'm thinking Bitcoin, but I'm also thinking maybe some of this real world asset stuff around tokenization is really interesting, I want to get into that.
No.
And so can you say, well, do you just say, look, I can't say anything about that? Or can you point them to into a direction of saying, look, you need to educate yourself about it?
I can say that, but I can't actually say that on the basis you educate that then is a good investment for you to undertake. So
absolutely,
the education part, and them being a self-invest, so them making the decision that that's what they want to invest in, as opposed to them relying on our advice to invest in that particular asset.
Got it. What about the pathways to invest? Like, can can you talk about like, hey, you go through an ETF and that's one pathway that might be suitable, or can you talk to them about custody and the benefits of self custody, or can you say, look, you're better off going with an Australian provider because you've got protection under Australian law if something happens? What can you say and what can't you say?
So this is really hard because it is really difficult.
Yeah.
Again, just to be mindful that I don't want to sound like I'm giving definitive advice here too, because this is an area where we've got to be
It's
cautious.
great.
Yeah, correct. The long and the short is we can give them material they can read to understand the pros and cons of things, but at the end of the day, they've got to make the decision for themselves. We've got to be very careful we're not actually leading them into a particular investment and they then coming back and saying, well, Shane, you told me to go into this investment and think about the consequence of that, and that went wrong. That's a real exposure for us, that we don't want to be saying that we're actually leading, even, with education or otherwise, leading them into a narrow thing that we're giving them education on one thing only.
Yeah.
Because that would then potentially be seen to be us giving specific advice on a particular product. The other part too, just with self-managed super funds particularly, is you've got to look at your investment strategy and also what the purpose of superannuation is too.
In the trustee?
Yeah, in the trustee, but also just the mantra of superannuation, which is the sole purpose test. The sole purpose of superannuation is to provide for your retirement.
Yeah.
Therefore, looking at the asset that you're investing in, and this is just general terms, not just cryptocurrency. So therefore, having speculative assets in your super fund, even a small portion, you're just going to be very careful that you're meeting that sole purpose test and not diverting from that, because that could then be a breach of the superannuation investment rules because you're not adhering to the sole purpose test. Now, it's a fairly broad motherhood statement, but still within that, you can't put all your eggs into one basket, or even if it's a small amount, that it's just a really speculative investment that's not a long-term investment for your retirement. So you don't want to try and trade crypto or any other investment within your super fund, because that might not meet that test. So there's certain rules around super funds that are particularly relevant to funds that might not be for you in your personal name or otherwise, that you also need to be wary of when you're investing in general.
Yeah. Yeah, that's a great point, and hadn't really reflected on that too much. I think the trading side makes sense to me. If you're day trading out of your SMSF, then I can see an argument there being presented that maybe that's not necessarily looking longer term. But, going into a smaller cap, crypto token because you think it's got great long-term potential. Yeah, it'd be interesting to see, are there any precedents out there that have been proven on this, or
No.
it'd be a really hard one to argue, and I'm sure well, I'm not sure. I would expect that they would end up leaning towards the side of the consumer, but
Yes.
But you wouldn't want to be the test case.
No, you wouldn't. And then also within super funds or otherwise, there's the between a retail investor and also a wholesale investor, and therefore the information that is required in that too. So there's a whole raft of different issues in terms of advice, education, and giving that advice in terms of specific assets, whether it's crypto or something else, that depends on your circumstances as well. So I'm always almost saying that because it's general in nature and don't rely on it in any way. But yeah, you just got to be careful. It's okay to have some assets that are a little bit speculative, no matter what super fund or anything, as long as you're not putting a concentration of assets into one basket, and that's going to then jeopardize that potential sole purpose test that we talked about.
Right. Okay, good point. One of the differences between crypto and other asset classes is that you can't regulate it as easily out of Australia because it's global. And if you've got other financial products, you can say, well, to issue a license to sell those financial products in Australia, you've got to be an Australian provider or pass our tests. In crypto, you can't do that. Do you think that that's going to end up having a pretty adverse impact? Do you think it's, because consumers will find a way around it, is my concern.
Yeah, correct. Potentially, but that's why ETFs are becoming part of the mix too, because that then gives it some sort of regulation. Investing in crypto, you might disagree with me on that one. Please challenge me on those things. But yeah, look, and this is the joys of the international markets, isn't it? We're dealing in a global environment, and it's about how we can adapt in terms of regulation and legislation within Australia to make sure that that's not jeopardising people or losing the opportunity to invest in things that give them create wealth for them because of the global nature of it, etc. So it's a tricky one, and yes, I think that is an impediment at the moment. Yeah.
And I think it comes back to what Andrea said earlier as well around, crypto started as a libertarian kind of movement. It was all about the principles and the values of it. And so that decentralized, global, empowering the consumer, removing the bureaucratic constraints of regulators and intermediaries is kind of baked into the ethos of the asset class and can't easily be removed. Or arguably, if it is removed, you're kind of disconnecting from the core benefit of it. And so, that's a really tricky thing for a regulator to kind of navigate, and also for people like yourselves who are operating in a highly regulated environment to operate in.
Yeah, absolutely agree. But this is a challenge because on the other side of it, flipping it back to us giving advice in this, we want to have some protections through regulation as well. So, fine for this decentralized thing if you're going to go it alone and do it yourself without engaging advisors. But us as advisors, for me personally anyway, we want to have some protection in this so we may personally want some regulation if I'm going to advise clients about investing in crypto or whatever it might be. I need that regulation to protect me in some way.
This is one of those asset classes where, because of the nature of it and the deregulated backbone behind it, educating people about it so that they can make their own decisions without relying on an advisor is really important. That's why this is such an important conversation and why we are, pretty much fully on board with what you're doing is because we need for our clients who, in most instances for us, and the reason why I guess we're where we are at with it is because almost all of our clients are really sophisticated investors anyway. We don't get people who are coming in off the street with a few $1,000s to invest and they're looking for the best options. We're talking about people who have built reasonable amount of wealth to start with. So they are really hungry and keen for information and they're curious about these things. They don't say to us, oh, you guys just sort it out. I'm not really interested. Like, when we're doing a statement of advice for people or we're engaging with them on their financials and whatever, they're asking for advice, but they come to us with a pretty good understanding about what they're doing. And they will say, can you help me with these things? And we're, in a situation where, sure, we can put you in touch with people like you because you've got the skill to be able to educate them further than what, your standard advisor can. But, we're limited by what we can do because we're working with a product that is largely unregulated in a situation where we're trying to shove it into a regulated system. Yeah. Where we can say, do as much of this as you can. So the education piece is so important with this stuff because we are, there is a lot of info that just floats around, TikTokers and all of that sort of stuff. And we're trying to create a more sophisticated conversation around those things, which makes it a bit harder.
Yeah, and this is a critical issue, isn't it? It's because people are doing it. The 30% of the population are in crypto. And if Australia makes it too hard, they just go offshore and do it offshore. And so it's easy to do, right? And then they're like, well, I'm going to try and hold that away from the ATO so they can't see it. And then you're breeding in this sort of this toxic kind of investing mindset, which is not helpful for anyone. And the industry, it's there to balance, protecting the consumer with helping them achieve their goals. And that protecting the consumer, you can't protect the consumer if then you can't even have a conversation with them about it. It's much better to be able to see, okay, you've got $100,000 worth of crypto in your portfolio here. Okay, well, look, that's in line with your risk profile or not. And then I can see all your transaction data. At tax time, we can plan for that. We can allow for that. Yeah. So being able to incorporate it into a wealth management relationship with a client, I think is really important, even if from a regulatory point of view, you can't actually add much value as far as giving them advice on a token and arguably you probably never will want to do that because the depth of expertise required is not a skill set. It's but at least with that, if you've got that line of sight, if you've got that visibility, you can retain that holistic client relationship. You can advise them with more insight, and that's got to be beneficial.
Yeah.
Yeah, absolutely. Yeah, definitely.
Yeah. An interesting point around, the clients that you've got. It is, I've shared this story with you before, but I'll share it with the listeners. The reason I started this in the first place was because I just got tired of having the same conversation over and over and over and again with everyone about crypto. That really, all of the people that I was bumping into, they're all my friends and networks through the kids' schools and everything. They're all successful business people in their fizz, or executives in big organizations that, they've been investing for decades. They're used to making decisions. They're used to being making their own decisions and educating themselves. And they're all interested in crypto, and they all want to learn about it to make a decision, but none of them know how to. And when they talk to their advisors, the advisor just either talks them out of it, tries to talk them out of it, or basically goes, I can't talk about it, And so that's when I went, there's a problem here, and I need to be able to help fix it without, overstepping the mark myself from a regulatory compliance point of view, which I've got to be super, super careful about.
Mm.
But the need is there. There was one person I spoke to, and he ended up thinking, I'm going to go with a broker. I ended up connecting them through to them, and they didn't open an account with them. Instead, he went back and his partner said, oh, look, I've bumped into this. I've met this person, through following them on social media. They ended up opening an account with They put $50,000 in, gone.
Yeah.
Gone. And this is a successful, well-educated, a smart person, and so those scams, they absolutely are out there, and I think that consumers need that protection, and the advice industry should be that first line of defense.
Mm-hmm.
Yeah, that's 100%. And we've seen, unfortunately, clients who have lost money like that situation, and substantial amounts of their wealth as well because of the FOMO issue too. My mates are doing it. They're telling me about all this money they're making.
Yeah.
I'm going to try and make a quick buck, and I'm going to take a risk on putting a lot of money into it. And we've unfortunately seen situations where hundreds of thousands of dollars have been lost because of it.
Yeah, look, I've got countless examples as well, unfortunately, and it's not just that; it's losing your keys to your cell phone,
correct. Yeah,
all of these things. There are a lot of pitfalls, and which is why we spend so much time talking about this.
Yeah,
and hopefully people are listening, and hopefully it's helping.
Yeah, hopefully. Yeah. We hope that they're listening to us.
Yeah, exactly. Otherwise, we're just creating an echo chamber.
Yeah.
All right, so let's just project forward a little bit here. As an asset class, digital assets, cryptocurrencies, as an asset class, where do you think it's going to be in 5 years' time in the advice industry?
Yeah, I think, look, obviously it'll be a bit more mature, so there'll be hopefully less volatility and so on in that. So I think it will, in 5 years' time, I think it will be a genuine asset class for financial advisors to offer to their clients. Simple as that. I think it will be that we'll get the regulation right and it'll be a position where it is just another asset class.
And we might not get it right here in Australia first go, which is likely. We've talked about this before. But the rest of the world will get it right, and we will do what we usually do and follow behind with what's going on. And it's certainly one of those things where we are waiting for the response from organisations that, maybe don't have the resources and the smarts inside them to be able to move as fast as what the actual technology is moving. And I think that's the biggest deal, is there's not enough money in our government organisations that are making legislation to be able to respond to this as quickly as it needs to.
And they're just slow in general.
We've seen it as accountants. It's one of those things where, we see this all the time, that things take such a long time to move, and they need to move
very rapidly. But I think 5 years' time, I think we might be there. And that's a positive thing.
The appetite is certainly there anyway. Like, there is appetite to move quickly with these things. There's definitely talk within government and within bigger organisations to make these changes more quickly. We hope. Fingers crossed.
There's certainly a lot of movement within the crypto community. All of the leaders in the space, DECA, blockchain, APAC, even the the CEOs of all the big exchanges, they are very much advocating for regulation. Everyone needs it. Everyone wants it.
Yeah.
So I think everyone's pushing in the same direction.
Yeah.
How quickly it gets there, we'll wait and see. But it is desperately needed.
Yeah.
What about 2 years?
Look, I'm always a glass half full person, so I think we'll have progress in 2 years. I don't know whether we'll be quite there yet, but I think we'll be very close to having the regulatory framework in place to be able to have this as a genuine asset class within super or just as a part of your portfolio, and for us advisors to be able to then be able to confidently provide advice on cryptocurrency.
Yep.
I think there'll be a lot of movement in the technology before there'll be movement in the regulation. So the technology will change and we will start to see what we've talked about with, property titles, with transfers, with international transactions, with the way we manage, even, thinking about these silly things where you go overseas and you still have to connect to mobile data in the country that you traveling around in, and you think to yourself, that shouldn't happen in this day and age. There's technology that should be able to work. And I think the technology that's moving along in the background, quite aside from the cryptocurrency part of it, that technology will move pretty fast. The rest of it, from an Australian regulatory standpoint, will probably take a little bit longer, but it'll move faster than what it has moved in the past 5 years. So the next 2 years and the next 5 years will move much faster than what the past 5 years has moved.
Absolutely. Yeah, it's a case of slowly, fast.
Yeah.
It's like stable coins, slowly, bang, suddenly it's just taking over. And blockchain will be the same, slowly. And then we start seeing some mainstream use cases and then suddenly.
Correct. And that's seeing those mainstream cases is the key thing to it. And that will accelerate the adoption and the regulatory framework that comes with that. Yeah.
Look, I think, and we're going to, my view is we're going to see that this year. It led out of the US. David Sachs' working group on crypto is due to report back to Trump with a new regulatory framework in August. And I think once that gets delivered into the market, you're just going to see it's just going to become normalized.
Yeah.
Because all the mainstream financial institutions are, just going to just jump on it, because otherwise they're going to get left behind.
Yeah, exactly.
Slowly, fast.
Yeah.
Which I think is the standard with these sort of this technology now. And, as you said earlier with AI and things, as it's moved so quickly in the past 6 months. It's gone from being nobody's talking about AI to everybody's using AI.
Yeah.
It's quick.
That's a whole nother conversation, but there are a lot of parallels. I mean, regulations, how do you control it? How do you regulate it? The fact that the genie's out of the bottle and it's global and no one jurisdiction can do it. It's a lot of similarities, and it's fundamentally reshaping industries today already.
Yeah.
So interesting times we live in. Maybe we'll drill into the AI, because I'd love to know. I'd love to hear how you guys are using it in your practice.
Yeah.
But that's maybe another podcast.
Another podcast episode.
Yeah. But okay, so for people who might be listening, who are looking for financial services advice, accounting or wealth management advice from somebody who is understands crypto, still has to work within limitations, but is not anti-crypto and is able to support them on their crypto journey. They might be looking for people like Aintree Group. How can they find you guys?
So we're over all the social medias. That's one of the things about us. I think it makes us a little more progressive than some other accountants, that you'll find us on social media. Our Aintree Group is our handle on all of our social medias, so just our name, the @ in front of it. And we're based in Hawthorn East in Melbourne, but we do work nationally and internationally, so we do have clients all over the place. But yeah, find us on social media or on our website. Andrew, I'm sure that you'll put some sort of website link for there. I think I need to follow us here.
Yeah, perfect. I do try to avoid that, crypto bro exploding graphics coming out and everything, but for you, I'll put it there.
Great. Yeah.
Thank you.
Well, thank you very much. Appreciate you coming in. As a late recording as well. You guys have had a super busy day, so I really appreciate you guys making
Thanks
the
for
effort.
having
It's good fun. Thank you very much.
All right. Talk to you soon. Thank you.
Thanks, Andrew.
Bye.
This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.